So with that, I'm going to say something about, or I want to start with some of the contributions of the sector that Mozilla has already touched on, before we get into the performance of 2024. So what I've done on that first slide is just to give you a sense if you split the different facets of mining in terms of contribution. So in terms of nominal GDP, the very last column there, contribution, is in the contribution to nominal GDP, which is at 6% in the first 3 quarters of 2024. That came down from 6.3% in the same time 2023. But so it's still, this is the direct contribution, right? So at 6%, it's still quite substantial in 2024, despite the challenges the industry faced. In terms of exports, so here we really get to the meat of mining's contribution. So there are different ways to slice and dice this, of course, but if we just look at the primary mineral exports, and if we compare that as a percentage of overall merchandise or goods exports in South Africa, you're looking at around a 45% contribution. If you were to add some of the more beneficiated or processed minerals, you can lift that contribution even higher, to between 50-60%, depending on what happened to commodity prices in a particular year. In terms of taxes, I'm just showing you the corporate taxes here. So as a percentage of overall corporate taxes being paid in South Africa in 2023-2024, mining contributed around 15%. Now again, in years when we have higher commodity prices, that contribution would be even more. If we look at a broader spectrum of taxes, so we take corporate taxes, we take VAT or VAT paid by mining sector, and we take the personal income taxes paid by mining sector employees, that number grows to more than 100 billion in terms of the mining sector's tax contribution in 2023-24. Of course, we're still waiting for the 24-25 numbers. Mozilla and Paul has already touched on employment. All I will add here is in the third quarter of last year, in terms of the total formal employment in South Africa, according to the data from Stats SA, in their quarterly employment statistics, mining's contribution was around 4.5% to that. And then finally, Mozilla has touched on the employee earnings as a percentage of overall employee earnings in South Africa. Again, according to the quarterly employment stats from Stats SA, you're looking at almost a 6% contribution. So I guess that gives you a sense of that mining does indeed matter in South Africa. And for that reason, we of course need to foster this industry. And also, these contributions are, whilst this industry is under pressure, can you imagine what these contributions can look like if we really have a growing mining sector? So I guess that's one of the messages we want to leave you with. Let me then go into some of the broader trends affecting mining, something on the global economy, including growth and inflation. So I guess you know that last year there was quite divergence in the globe. The US was still doing well, growing at almost 3% in real terms, but Europe was a struggle, Japan as well. In China, we ended up with 5% real GDP growth, which is a bit of a moderation from the previous year, and also continuing the moderation over the last decade or so in Chinese growth. So that's something to watch. India is emerging, of course, as now is the fastest growing big economy in the world, although its growth slowed down in the second half of last year at more than 6%. That economy, I think, is increasingly important for South Africa, especially if you think of our coal exports, for example, which over the last several years have been diverted away from Europe, now very much focused on the Asian market. I think probably the most positive thing I saw story last year was on inflation. So both in the US, Europe, of course, we saw nice moderation in inflation. I'm plotting South Africa's CPI on that chart also. As you know, that moderated to below the Reserve Bank's target. And that, of course, opened the room for interest rate reductions, which should over time be to the benefit of the commodity sector in terms of stimulating some demand. Perhaps this is not in your pack, it is in the pocketbook, just to say something about mining input costs, which generally run above general inflation. So this is the input cost index that we calculate at the Minerals Council. But even there, we saw a nice moderation in those input costs last year. So we went from, on average, 9% increase in 2023 to last year less than 6%. Overall inflation last year was 4.5%, so about 1.5 percentage point gap. Input costs being higher than that. But I guess even on that front, the cost situation is we're in a better place last year than in previous years. Then on commodity prices, so here we're looking at some of our key export prices in rand terms. So we're already taking account of currency movements, and I'm just assuming that all of them were at a level of 100 in December 2023, just so that we can plot all on one scale to give you a sense of the divergences. And then we have this 100 horizontal line. And you will see on that chart, the only one of these prices that ended the year above the 100 line, in other words, increased throughout the year or ended the year higher, is gold, and significantly so. Now in nominal terms, the dollar gold prices had increased. Then on commodity prices, so here we're looking at some of our key export prices in rand terms. So we're already taking account of currency movements, and I'm just assuming that all of them were at a level of 100 in December 2023, just so that we can plot all on one scale to give you a sense of the divergences. And then we have this 100 horizontal line. And you will see on that chart, the only one of these prices that ended the year above the 100 line, in other words, increased throughout the year or ended the year higher, is gold, and significantly so. Now in nominal terms, the dollar gold price is at a record high, again so as we speak. But that is sort of the exception last year. If we look at our other key commodity prices, the PGM basket price was flat, even in rand terms, and this, of course, is after a very large decline the previous year. So the point is, the PGM sector, which is the largest sector in South Africa in terms of the price environment, that remains a notable constraint. Coal was flat on the year, and then we saw quite a notable decline in the iron ore price over this period, and that to a large extent has to do with concerns surrounding the Chinese economy, which is the biggest consumer of iron ore from South Africa and the rest of the world. Let me just quickly say something about chrome. Chrome did well for a large part of the year, but in the final months of the year, we started to see the chrome price come down. And this is quite important because chrome was to an extent a bit of a lifesaver for the PGM producers. The production is still doing well on chrome, which I'll show you now, but those prices have come down from pretty lofty levels. And again, this is tying into the Chinese story to a large extent. Then I just want to give you a long-term perspective on industrialization or deindustrialization in South Africa. There's a lot of talk about this. We may hear about this again in the minister's speech, for example, and throughout the week. Now, normally when you talk about deindustrialization, you talk about the manufacturing sector. Right, and that is the top dotted line in this chart, and you can see this sorry tail of, as a percentage of GDP, how the contribution of manufacturing has come down quite dramatically over the last 30 years or so. The bottom line is construction. Same story there. Well, it hasn't come down, but it's sort of flat line, which is of course a big disappointment given all of this talk of infrastructure spending and the need for that in South Africa. And then the middle line is mining. So that's mining share as a percent of GDP. Just note that I'm using the nominal numbers here. So we're looking at volumes and price. Now, of course, in different sectors, you have different price movements. Now, in nominal terms, because in mining has actually been relatively stable over this period. There has, of course, been volatility within that. But where we sit today, mining's nominal contribution to nominal GDP is actually higher than 30 years ago. But that's largely a price story, right? If we had to do this in real terms, so just look at volumes, then the chart is very similar to the manufacturing one of decline over time. So I guess what this is telling us that the mining sector has been bailed out by commodity prices over this period. But again, it's a massive lost opportunity, right? Because if you can add the volumes with that price, again, we go back to the contributions at the beginning. We could just be contributing so more to the fiscus, to exports, to employment. So I think this is an important chart when we think of policy in South Africa and what do we need to do to turn this situation around, not just in mining, but in some of our other industrial sectors that are, of course, those sectors that can absorb the low-skilled employment. Right, let me then briefly say something about specific mining production trends last year. The first chart, we have electricity production versus mining production. And in that circle, it's just to note that the improvement we've seen in electricity generation, but we haven't really seen mining respond to that. There's been somewhat of a response, but I think if I said to you a year ago that we will have 10 months without load shedding, I think one would have thought that the mining reaction may have been a little stronger. Of course, there are leads and lags with these things, but I guess what that tells us is, or it just emphasizes the other non-energy constraints that remain on the sector. Just to delve into a bit of a detail of the subcomponents, it was a bit of a mixed bag last year. We have the actual production data for the first 11 months of this year, and it looks like for the first time since 2021, we'll actually have the overall sector in real terms increasing production. But there are a lot of nuances within that. Gold was a struggle last year. It did quite well in 2023, but we're going to see around a 6+% decline in real terms in gold production. And again, this is despite the elevated pricing environment. So if you strip out gold from that number, then the increase looks better for the overall sector. But look at chrome. I mean, chrome production. This is chrome ore and concentrate. That another year of booming production in that sector. Just to say something about the employment numbers in a bit more detail. So we have the data for the first 3 quarters of last year. We saw unfortunately around 12,000 job losses. Again, this is according to Stats SA's data that they, to an extent, get from the DMRE. Within that, it was very much focused in the